Hi, everyone. This is Alina from Windermere, and I'm with Emily Bort today of Movement Mortgage, and we're talking all things finance, home ownership, and many more things. So thank you so much for being here,
Thank you
Emily.
for having
I
me.
appreciate you.
Thank you. Thanks for inviting me.
Tell me everything about, how'd you get started in loans and how it led you to be where you are today?
Yes. Yeah. I was in finance. I was an economics major in college and knew growing up, my mom was in real estate. I think you mentioned you grew up around real estate also. So I was always kind of around that environment. And then with the econ major, I got into, I was an analyst for a large investment bank.
Okay.
And then as I started to grow my family, I needed something a little bit more flexible. And so mortgage kind of felt natural. I understood it. It actually made a lot more sense than investing, which I think is also true for the mainstream, is that people like real estate because it makes sense the way it, if you buy a house, it goes up in value, you sell. It. Yes, exactly. Versus an investment, it's so confusing. And so it was like, oh, this makes so much more sense. And then got into the business obviously before 2008 and the Great Recession, and kind of learned a new, like really learned my core of how mortgages work. Because first in 2005 when I started, it was a totally different industry. The way money was just handed out.
Right.
We didn't have to learn.
Do you have a name? Let's give you a loan.
Yes. Oh yeah. What's your credit score? Okay. Can you sign tomorrow? It's definitely not like that anymore. Yeah. So after 2008, we really, had to dig in and learn the business. And then obviously it's ebbed and flowed since then, but it's just turned into a 22-year career or not 22, sorry, that was my marriage. 20-year career. Yes, 20-year career. I always knew I wanted to be a career. I didn't want it to be some side hustle or, something I just kind of dabbled in.
And it shows always.
Yeah. So, I mean, it's an important part of my life. And, we definitely, my husband has to deal with me on the phone at night, as with you, I'm sure. And that's just the perks of our business.
It is perks. So. I was in loans in 2004.
Okay.
Yeah.
So, but that was even before I started in 05.
Yeah.
So
2004, we saw all of that beautiful loan giving away.
Yeah. Oh, yeah.
And
I worked for the Big C company, so I know.
Countrywide?
Yes, I did. Yes. But again, didn't know what I didn't know.
Yeah, and that's okay. I mean, we worked with WAMU.
Yeah.
We worked with the big dogs, I guess.
Yeah.
But I was a mortgage broker.
Oh, you were? Okay. So yeah. So that actually probably translates into what you're doing now, because you're able to kind of, obviously you want to have that divide with your clients, but you also know enough.
No, I need to kind of pre-qualify you sort of.
Yeah. That's helpful.
Can you afford to buy a house at all?
Yeah.
Or can you just,
you can have some of those initial conversations
100%,
before. Not wasting your time, but at least give them the next step. Is it whether meeting with a professional or maybe you need to work on this?
You can always tell them what you're not supposed to be doing.
Yeah, I know.
Let's start with that.
Yeah, or undoing. I know I spend a lot of time undoing what they think they know, because everyone's parents and, grandparents, everything is instilled, from a really different place than we are today. And so I spent a lot of time, trying to undo some of those things. And, sometimes it works, sometimes it doesn't. But it's crazy.
Let's refer to the professional.
Yeah. But just the deep rooted thoughts around money. It goes back.
Totally.
I mean, and even for me personally, I think about my grandparents and how they did things. And so it does have an effect on how we function as adults.
Absolutely. So. And what's the life like for you today? Tell me your day-to-day,
Well, it's not like it used to be because my kids aren't little. So, I used to have to be home to get them to school. Now, exercise obviously is a huge part of my life because it keeps my mind fresh, which as I get older, I find I can't function unless I get that, outlet.
Sure.
So, I start my day obviously with some sort of movement, and then it's in the office. I mean, I haven't had a real day off in 20 years. I mean, I think I took one trip to Mexico.
And you were still on the phone, on the computer.
Yeah, I try not to be. And don't get me wrong, I have a team. I have amazing people that support me. And so it's not like I have to be glued to my phone. But, the transactions happen, and we have to know what's going on them. Because ultimately, I don't know about you, but some of these people build these huge teams and, everything filters down. Yes. And I always find that my clients, I don't get the same reviews that I would get if I'm really involved because they're referred to me.
100%.
They're not referred to, which again, my teams are amazing. They do a great job. I work with some amazing women, but they still want me interacting and they want to know that I'm weighing in on every step of the process. And so when I step back too much, it just doesn't ever seem to go as well.
Absolutely. Well, I mean, if you were referred by your past client who had a fantastic experience and she or he is giving your contact information to their, relative, friend, I mean, I would expect that too.
Yeah.
That's like, I want the same service I got when John was working with you or something like that. So.
Well, and I think that's probably a realistic challenge with all growth, right? And scaling.
Yeah,
it's like because we only have so many minutes in the day and we like to believe we can be quick at everything. But it's what can you download so that you're not doing it, but then also feel like you're present in the transaction.
Yeah, absolutely. I mean, you can always work with bring in the person who's helping you and introduce them to the client and it's fine. So in case I'm not available, you can reach Emily
do you use showing assistants or anything like that?
Actually, I do not. It's me.
It's just you.
Occasionally, if I am out of town, my mom and I help each other out.
Okay.
So, like, I will ask her to help with the showing, and then vice versa, of course. But they get me. They get me throughout the entire process, and then if once transaction is under contract, I do let them know you'll be hearing a lot from my transaction coordinator, who is going to help keep the process going.
I appreciate those transaction coordinators too, because it's like one more person making sure we're hitting all the deadlines.
So they know that you still can call me, but hey, Megan can call you as well and just remind you of X, Y, and Z. So it's
super helpful.
Yeah.
Well, and everyone gets so many emails. I mean, nowadays.
I know.
And it's hard if you're, at least I feel like sometimes I'm chiming into an email that I don't need to, just to make sure they know I'm present and that I'm following along. But it's hard. It's that balance of making sure they know that you are involved in some of that. The middle part of the transaction, it can be a little overwhelming. It is very important, but it can be very overwhelming.
Absolutely.
So,
absolutely.
Yeah.
What are you seeing right now in the mortgage world? The latest, let's say, in the last few months. What have you seen?
Well, I think everyone, obviously, in the fall, we're hoping that we'd see rates, come down immediately with just some of the political pressures and things. We have not necessarily seen them drop meaningfully, but slowly. Meaning, it's not like we had one day where they just went straight down, but slowly we have seen them kind of come down to that 6% range, which is amazing. I think the last statistic I read is that at 6%, there's a 5.5 million more buyers that can qualify versus what at a 6.5 to 7. Whether those people end up transacting is a whole nother story, but it does make a big difference for affordability. And that's kind of the $1 million question is like, how are we going to get people into homes affordably and then have enough of them? So, because that's the inventory piece. So affordability and supply and demand. But there's a lot of people this spring market, the Super Bowl's over, football season is over, and we see people that are ready to jump in and make sure their finances are lined up. Yeah. And the earlier you do that, the better.
Of course.
But,
always.
Yeah.
That's my advice to every single buyer who was like, can I go look at a house? I said, absolutely. But let's figure out if you can afford to be buying a house. It's a better, it gives you confidence whether you can afford a house for this much or this much.
Absolutely. Yeah.
If you can give, let's say, 2 pieces of advice to a buyer who's sitting, what we say, on the fence.
Yeah.
What 2 pieces of advice would you give them in today's market?
Early is better, early planning. So one of the things that we didn't have access to a few years ago is a soft credit pull. So what that means is that we're able to go in and pre-approve somebody without actually pulling with a hard inquiry.
Okay.
That just gives us a quick snapshot of what we're looking at. And so if there's anything that they need to take action on early, we try to give them that, okay, let's work on this. Whereas, a few years ago, it would mean, we're starting the process. And so now we're still starting the process, but it's still, still a bird's eye view because we can just take that quick snapshot. We're not digging them with a hard inquiry. Sure. So the sooner the better on that. And then also, because affordability is a thing for a lot of first-time home buyers or people that are thinking about it, is, having conversations again with your family and the people that are going to help kind of or be a part of your transaction, because you'd be surprised, you have a conversation with your parents and they were already thinking about, oh, we want to be able to help you with this. Just opening those conversations a little bit with the people around you that are important. I just feel like a lot of productive conversations come from having those talks.
Absolutely.
So, yeah.
And the second one?
Just because I'm talking to a realtor, I don't want to say, oh, you need to find a good realtor, but it's true.
It's a great advice.
It's
absolutely.
Yes. Yeah. It's finding that person that you click with, that you align with. You're going to spend a lot of time with them, hopefully. Yes. Maybe you'll see one house, maybe you'll see 20, but figuring out who you want to work with and who you trust, I think is so important. Yes. And again, word of mouth, some of the conversations, some conversations you don't want people's advice, but I think, narrowing down who you're going to work with early, because if you aren't speaking what you're looking for to your realtor, they're not going to know to say, oh, I just found
we're not mind readers.
Yeah, exactly. Yeah. Yeah. And then you can, especially with tech and all of the follow-up tools, if you can just get them, on some sort of list of listings or whatever it is, however you send your clients their data, it makes a big difference. And then once they start thinking about it, then it's like the reticular activator is going and they're like housing. And they'll usually end up buying sooner rather than later. It's just kind of the way it ends up going.
Okay.
So
for those buyers who are out there who are choosing lenders, right? And for those buyers who like the online lenders, right? That's a very common option for them. What would you tell a buyer when they're choosing a lender between an online and someone who you can pick up the phone anytime, like you?
Yeah. So. Well, obviously the simplicity of the online lending world, we're not naive. Some people don't want to have that human interaction, but they're not going to get that advice, obviously, from the online lenders or the 800 numbers. I also think it's important that people don't realize how much tactical planning is done behind the scenes on product. And when I say product, you might be getting a 30-year fix, but if someone makes a certain amount of money, you can change the type of 30-year fix they have so that they get a better interest rate. Absolutely. And I definitely know, and I've seen it, that those online lenders, they're not state specific. They're not necessarily even market county specific. And those are just important things to know for your local area because it can make a big difference in what you end up paying.
Absolutely.
So, and then again, obviously reviews, reputation, you're not going to get the same person when you need something. No. And it goes for even, when there is a problem, you want to make sure that you can talk to a real person and solve it.
That helps you from the beginning to
exactly.
end, right?
Yeah. It's not as simple as push button, get mortgage.
Yes.
And I do think, not to take the tangent, but that's where I think aligning more with financial advisors right now is so important.
Absolutely,
because the actual transaction might get simplified in the next few years, meaning push button, get mortgage. That part is really, there's things that could happen that could shorten that transaction and make it a little bit more technologically advanced. But I do think that advice factor is more important than ever. And so I do see more and more people going to their financial advisors to get advice on their next step. And so for me, if I'm aligning with financial advisors, I find that when you get those kind of referrals, they're just stronger. The people trust you more. Yes. They know that you were referred to them by someone that they really trust.
Absolutely.
And so then it's just a lot. Then you're doing less selling and just actually getting into the nitty gritty of like, let's get this done for you. We're all working towards the same goal. And same with realtors. I don't see a lot of realtors aligning with financial advisors. And I do think there's a lot of opportunity there because it's such a, just the amount that people respect their financial advisor.
Absolutely. So. Financial advisors are important for everybody, whether you're just starting out, you just got your first job, to someone who is like, hey, we're retiring and we're moving on to, outside of the country or something like that. I do actually right now, I'm working with a lot of clients, and like I told you before, who are sort of cashing out on their home, right? Like they're selling their home of 20 plus years and they are like, well, we need to reinvest, right? What advice would you give someone who is either like a move up, we call them a move up buyer, somebody who's like upgrading their house, right? They've outgrown their home, to moving into something bigger, maybe a little bit more expensive, more space, whatever that could be? Like, what advice would you give that person?
Well, obviously resetting, not in your expectations, but just the reality, because things have changed so much. There's many people that have been in their homes for 20, 25 years. Most of them have probably refinanced at some point because rates were so low several years ago. But just getting really clear on what things cost now. And the monthly payment, math is math. And I think sometimes people don't realize that. The amortization, the monthly payment, that is, the interest rate is the variable, but the math and the way it's calculated is the same. So getting really comfortable with how those work, but then also, looking at your whole financial picture holistically, because a lot of times it can be as simple as, maybe we put a lot less down on this house than we thought so that we can invest more with our financial or our wealth advisor and get to where we want to be quicker. And so I see that happening more and more, where people think, oh, I'm going to put, this big nest egg down on the next house. And they think that's the way they're going to go. But then after, more conversations and looking at how money can grow and get them to their goals quicker, they realize, oh, maybe it doesn't mean putting so much down. Unlocking that equity is the hard, that's the $1 million question, right? And that's why so many people are kind of stuck.
Yes.
Yeah. The locked in effect you hear about, but people are tired of it. That's what I'm seeing right now. I'm sure you are too. It's like, okay, this isn't any fun anymore. We want a new house.
Yeah. And the 2% rate, whatever. I don't want it anymore.
Yeah.
I'm bursting at seams in my house. So where am I going? Right.
Yeah.
That kind of leads me to a next question of like, what have you done many like bridge loans, or like, what would you tell a client? What resources do they have for that option? Yeah. So the idea of a bridge loan, again, is a little bit of an antiquated product, meaning in the 80s especially, the bridge was literally the bridge from one house to the next. Yeah. And really, that's not really what a bridge loan is the way it works now. We're still giving them a loan on their equity, but we're not putting a loan on both properties, because that's how the bridge loan used to work. Is there would I didn't know that.
Yeah, it was cross collateralized. So literally, it was one loan. They still exist. We just don't use them as much because they're very expensive. And so again, the more early planning, the more bridge options you have, and the less it's going to cost. Because if you aren't planning, and not to say you can't do it if it comes up and you need to put something together quickly, but it's going to cost you more. Sure. And so because some of those bridge products are just a little bit expensive, there's a lot of really inexpensive ways to do it. And if you plan early, you can get that set up. And some of it is simple as setting up a home equity line of credit so that you can, literally write your next down payment check. So,
what are you seeing right now? I know maybe you don't do HELOCs, but like, how long does it take for a buyer or anyone to get a HELOC? Is that like 30 to 45 days?
No, they can be put together in 2 or 3 weeks. Okay. Some of the banks are backlogged because some of the banks, that's like their specialty products, especially some of the local regionals. They take a little bit longer, but with the fact that technology has made it so you don't necessarily need an appraiser, meaning someone doesn't have to actually come out and inspect your house. They can use things like your digital valuation or your tax assessed value. That speeds up the process.
Sure. Okay.
So, yeah.
Very nice.
Yeah. But we're using them a lot. And I think realistically, if you have a home with a lot of equity, having a home equity line of credit set up and ready to go, it's responsible, because it's protecting you from financial emergencies and that, but it also is giving you options, and options meaning if your dream house comes on, you're not scrambling on a Saturday night to say, okay, how am I going to get this house? I need to put an offer in tomorrow. You already have the home equity line of credit. And so the strategy is already laid out for you, and you already know, okay, I have this line of credit. I'm going to be able to make this offer because I have my down payment accessible, which is unlocking your equity and giving you options.
For those people that don't know what a HELOC is, maybe explain.
Oh, yeah. I know. Isn't it funny that all the different acronyms that we all use? Yeah. And I use the word 1003 a lot, which is a loan application. And so it's like, oh, can I get your 1003? And they're like, what? Or an LOE, which is a letter of explanation. So I forget with acronyms. But the HELOC is just the home equity line of credit. It's usually based on the prime rate, which is is one of the rates that does go up and down when the Fed does meet. But if you don't use it, you're not paying any interest. So, obviously you don't want to go out and pay for your trip to Hawaii with your home equity line of credit, though people do. And that's a different strategy that, I'm not advising people on. But it's there so that you can access your equity. And because there's so much more home equity than ever before, I think it's important. It makes you liquidity.
Absolutely, yeah.
So
it's like a little credit card, home credit card.
yes,
sort of.
exactly.
You
exactly.
can cash out on it.
Don't use that word.
I know, I'm just kidding.
Yeah. You'd be surprised.
You didn't not hear that from me. Okay.
Yes.
You can
Yes.
cut that one.
Don't use your house as a credit card.
Yeah.
Please don't.
But the thing about, all jokes aside, purchasing a home does build wealth. And no, it's not a credit card, but it does propel you forward further than someone that, does not want to buy, does not want to invest. If they think that, hey, I'm paying my rent and I'm fine, that's great. But what about, you can just pay a little more, because I'm sure it's a little more than you would rent, but you actually own this property, right? Like it's very important to know the difference between, like, hey, I've heard so many podcasts where they talk about, like, one guy was talking about, like, hey, if you are gonna invest, sure, investing is great into stocks, but think about what kind of return on investment you can get on your home. Right? Especially the area that we live in. It's
we're very blessed. We're very blessed to live in this area.
You kind of, I don't know, I'm going to focus on like the 3 counties, right? King, Snohomish, and Pierce. They have grown in value tremendously over the last few years. Like if you look at rates of appreciation, they're pretty incredible. More than what your stock can provide for you, right? Like,
absolutely.
It's just
well, and the idea of leverage. So, I like the example of you could put 5% down on a home. So on a $500,000 house, you're putting down $10,000. Or no, sorry, that's wrong math. $25,000 on a $500,000 house. If you were to put $25,000 in the stock market and you earn, let's say, an average rate of return of 10%, then you're going to earn $2,500. But if you that same 5% down, which is $25,000 on a $500,000 house, you're getting that appreciation of that $500,000 house. So if it grows at 2 or 3%,
exactly. That's maybe the guy that I heard him talk about, like just comparing, like what kind of return are you getting by investing a little?
And that is leverage defined. It's how you can use strategic debt to grow wealth. And one of the things I've kind of said is you cannot save yourself to wealth. It's very difficult, meaning you could sit and scrape $100 every paycheck or $1,000 or $10,000 every paycheck. But without the appreciation and growth of real estate, but then also stocks and, your whole financial portfolio, that's really how you get wealthy is because of appreciation. It's not because you've saved. And so it's like,
print
you can't save yourself to wealth.
I'm going to print this quote by Emily Bort.
I have a presentation on it. I actually need to do it. So I have a whole, and it's even for women, we are, for whatever reason, it seems like women are taught to be, very good with their finances and just maybe be a little bit more meticulous.
Don't go shopping.
Yeah, I know. Don't buy those clothes, but you still have to, I know, the shoes and the bags. But the only real way you're going to get ahead is if you're willing to take a little bit of risk. And what that risk looks like is different for everybody. Totally. But getting into the game of investing and real estate, stocks, financial products, all of it, bags, you can.
Some are investments.
Yes, they are. Yeah. So
my husband will not agree, but
you'd be surprised. The luxury market is a whole nother thing. So
I have a friend who she's bought several Chanel bags, and she's like, you see this one? I bought it for this much. Do you know what it's worth today if I put it on the market?
Yeah. Or the Birkin bag, right? You can't even necessarily buy a Birkin bag unless you're invited, but you can buy a resale.
Supply and demand.
I know, exactly. I know. That's the goal. You've made it if you can get that Birkin bag.
Without taking out a loan on it.
Yeah, or using your home equity line of credit. Pay cash for your Birkin bag. There you go.
Pay cash.
Yeah.
Is there anything you would want to share that, like I guess I'm just like coming up with questions.
Yeah,
But
no. Well, I think right now, one of the questions, obviously, in all industries is how tech and AI is going to
I love this question
affect
so much.
what we're doing as real estate agents. How are you using AI right now?
Oh my gosh, I am all in.
Yeah.
I use AI not just for listing descriptions. Thank you very much.
Yes.
Actually, AI helps me, put together proposals. It helps me put together like content ideas.
Yeah.
Maybe just information that, like for example, you and I are talking, and kind of we need to simplify it for a consumer, right? Help me explain that to like a 5-year-old or whatnot, right? Like
Absolutely,
it's just, but make it so. Not only that, of course, there's just so many ways to marketing helps me a
for
ton.
sure.
It's
Marketing,
like,
I would agree.
it has taken, I mean, we wear a lot of hats. I have to not only show houses, I have to create content, right? Like I have to find resources for my clients. So it does help me put together kind of a guide. I have actually several guides for different clients that we've put together, me and my chat.
Yeah, I know.
How about you?
Yeah, I would say same thing. Just simplifying ideas. I'm one of those people that has a lot of ideas running through my head, and so it's been nice to kind of get some of those ideas out, and then it remembers for me.
Yes.
I don't even have to ask
we
it.
talked about
Yeah,
this?
and they're like,
Remember
yes,
you said,
yeah,
right? I'm
yeah.
like, I forgot about that.
Yeah, so
it
that
definitely helps me brainstorm.
Yeah.
Like it's just put it on paper. I'm like, oh my God, I didn't even think about that.
Yeah. I do think, I mean, obviously the copyright and copywriting is helpful because it helps speed things up. But I do, again, that human element, our brains are already starting to be able to notice the AI written copyright.
Oh,
and,
100%.
And you don't want to read it as much.
I don't want to.
Yeah.
I want to see the mistakes.
Yeah.
I want to see you make a grammatical mistake and, say something silly or whatever. Like, I don't help it write emails because I want it to come from me.
Yeah.
Right?
Yeah.
Of course, you can train your chat to, but you're never, chat will never sound like you ever.
Yeah.
As much as you try. And, and of course, the best is the human element. Picking up the phone and actually having the conversation with the client, and face to face.
And if you could have a bot do that, is that really the type of business you want to run?
Yeah, exactly.
Probably not. I mean, maybe some people are okay with that, but it's not.
Maybe you shouldn't be in the business.
I know. Hopefully we won't still be doing this when it's comes down to that. That's the goal.
I know.
That's the goal.
So I love the fact that your kiddos are going off to college, right?
Oh, yes. My son bought his first house this summer. So he was 23 and bought his first house,
this is amazing.
Yeah.
Okay,
yeah.
I want to hear the story.
Okay.
I love the story.
Obviously, we have taught our kids that real estate is, a great, solid investment. And so when he graduated college and was kind of settling down, his girlfriend already owned a house. And my kids actually benefit from the covenant loan through Washington State because they are they're registered natives. And so they were able to get a really great down payment assistance program, which the fact that Washington has this program available. If you're
listening, you need to look into this
if
loan.
you do not know the covenant loan, you need to look it up and you need to find a lender that can help you with that. Because basically, because of racially restricted covenants back prior to the Fair Housing Act in 1968, Washington State has come out and said, we discriminated against certain ethnic groups and we want to right our wrong. So that money that is available is it's a really powerful program and to help a lot of not just first-time home. Oh, you do have to be a first-time home buyer, but I meant not just young buyers. There's a lot of middle-aged home buyers that didn't think homeownership was going to be attainable for them, and to be able to bring this product to them and say, "Hey, you are you qualify for this money from the state." So that was really exciting.
And where did he buy?
He lives in our hometown of Enumclaw.
Nice. Let's put Enumclaw on a map, everybody.
I know. It's funny when I went to New York and took a Peloton class, and the instructor had heard of Enumclaw, and so she must have spent 3 minutes on this live class talking about Enumclaw. So it's the best little soundbite.
That's amazing.
Yeah, I know. Yeah.
The mayor needs to recognize
something.
Emily.
Yeah. I brought it.
Maybe you should be the mayor of
No. Politics is not for me.
Okay.
So thank you, though.
Oh my God, that's
Yes,
awesome.
politics is not
That's
something I
great.
see in my future. I know we were talking about, ways we can give back as we evolved in our career and as our kids get older. And I do see myself doing a little bit more nonprofit work, but not politics.
Not politics.
Yeah.
But I'm sure politics have hand in everything.
Oh, yeah. Yeah. As with everything. Yeah. I'll just keep my head in the sand in my coffee cup.
Yeah. Well, the fact that your kiddo has purchased a home within your hometown, tell the parents out there how, if they can, to help their kids who are ready to buy,
Yep.
whatever age their kids are.
Yep.
What can they do to assist their kids in
I love
homeownership?
this. I love this question because I do feel like a lot of parents feel like either they have to derail their financial planning or their retirement goals to help their kids. And I don't think that has to be the case. I don't think a large down payment investment is needed to be able to get into homeownership, but I do think you need to have a little strategy.
Sure.
A lot of people are really set on trying to scrape together that 3% down number. But if you look at the numbers and you can come up with that 5% instead of 3%, it can save you so much monthly.
Amazing.
And so that's where sometimes someone will have a little gift from a parent or a grandparent or an aunt or uncle. And I really show them how that extra 2% down can save them so much. And so I feel like, again, those early conversations we can have to say, okay, what are you willing to help with? And is it co-signing on a loan? That is helpful, but that doesn't necessarily help someone be able to afford the payment, because just because you can help get them qualified doesn't mean they can still make the payment. But if there's a way to be really strategic with a few extra dollars, and not everyone has access to that. So I want to be sensitive to that. But if you do, it's not that you necessarily need that 10, 20, $50,000 injection of cash. It's, just a little bit that can help, make a big difference.
That's fantastic.
Yeah. And it looks better from a real estate standpoint. If you have a 5% down versus a 3% down offer, you're going to lean a little bit more because there's a little bit more skin in the game. It's a little less risky. It's not huge, but it's enough that it might
helps.
Yeah.
In the end, the seller looks at the what? The bottom line.
The bottom
right?
line, yeah.
And
then how confident are you that they're going to get to the bottom line?
Of course, there's so many, not only the down payment portion that plays into an offer, terms, there's like hundreds of terms that you can include in an offer that can help the buyer have their offer accepted.
And are you seeing a lot of negotiation from sellers right now? I mean,
yes. Now, caveat to that is there's pockets. I mean, if we're looking Seattle right now, that, like, for example, North Seattle, the core of downtown Seattle, right? Like Magnolia, Queen Anne, those are hot houses right now. Everyone's coming back to work 5 days a week, 4 to 5, days a week. And so we're seeing a ton of buyers who are, I was showing a house about a week and a half ago. She probably got 20 offers on that listing. And I haven't seen that in, I don't know how many years. I'm just like, whoa. It was a cute house, Finney Ridge. It was beautiful. Yeah. And all the homes in that area. So it's going to be tough. It's just going to be a lot of skin in the game. Yeah. And terms. Yeah. The other day I did see in Edmonds, we're talking $500,000 over asking. It had a view. It was beautiful. Yeah. But then there's pockets where, listings are sitting a little longer. Yeah. And, it could be a home for a first-time home buyer, and they're just like, we just need for the seller to make that $15,000 concession, right? Yeah. Or, maybe 20. But those homes I'm seeing, they sit a little bit longer right now. Yeah. So it really our market is so dynamic. So it's hard to say. Yeah. It's going to come down to, there's going to be two answers. Now, do you want the money or do you want the ease, right, of the transaction? So there's, I went to see a seller about less than a month ago. That home needs a lot of work. Yep. But that home that needs a lot of work, they just need to get rid of it quickly, right? It could be an estate
move on
sale.
To the next.
And they just like, I don't have the cash to invest. And so that home is probably not going to be sold at what it could potentially sell for, right? If I'm telling you to, change the roof, change the siding, et cetera. On the other hand, a home that is, in the 1.5 and up range, that should be a move-in ready. Of course, I guess, again, it depends where, right?
Yeah.
1.5 in Mercer Island, it's like you're getting it for free.
Yeah, I know.
But then some areas, like I've worked with a seller for a year to get it ready, right? Whether it's, changing the roof, changing, landscaping, anything like that, of course, that's going to maximize your return 100%.
Yeah. Well, and, some of it is just deferred maintenance. So just because someone puts a new roof on, the buyers are expecting a roof. They're not, and
but
so.
they don't know. They don't know how,
yeah.
That's a great investment into something like that.
Yeah.
So
I know.
Less money that they need to pay.
I'm glad sometimes that I think those conversations that you get to have with people, because it's
sometimes it's not fun. I get to come into your house and tell you what to do. Not everyone likes that. And I have to be very strategic, careful not to hurt someone's feelings. But also, I'm not in the business to hurt feelings. I'm in the business to take my advice so you can make my experience.
They're coming to you because they want to sell their home.
Take my advice because that will most likely come out to be the highest return on your investment, right?
Yeah.
So it's
And do you have experience or any of those nightmare transactions where something went completely wrong? And
not recently. Years ago, we've had some things that just went a little sideways. I had a transaction a few years back. It was an estate sale. Long story short, there was problems with I'm trying to remember the term I want to use. Conservatorship.
Oh,
yes.
Okay.
Anyway, long story short, it took us over 6 months to close because my clients knew the value of the location of the home.
Yeah.
And we ended up closing, but 6 months later. So they were very patient enough. And now their home has almost tripled in price. So.
Yeah. Well, and it's just because you're doing the work today, it doesn't mean it's going to be a paycheck tomorrow. It might be a paycheck in 6 months or in a year or no paycheck, and it comes back to you in other ways.
Absolutely. So no, they're happily living in Woodinville, and it's a great home, great location. So they just had to wait a little longer.
Yeah.
So.
Yeah. I know.
Patience pays off.
Yes, exactly. Except for, there's that whole mentality right now where people say, I'm going to wait for rates to come down. And so I'm going to be patient and I'm going to wait. And obviously we haven't seen them come down as quickly as we had hoped. In fact, we saw them go up before they came back down. And so, when you really start looking at the numbers, it's someone that did go ahead and transact 2 years ago at the higher rates, they were able to get into the game and get that appreciation going sooner rather than later. So again, we're lucky in our market because prices are, really rooted in our solid economy here.
Absolutely.
And, we have strong jobs and it's just a beautiful place to live. So that makes it that much more of a assurance when people are deciding to purchase real estate. So
have you seen the meme where, it's pretty viral maybe, the meme where the guy is, or video, they keep going back 1 year ago, I should have bought a house. 2024 should have bought a house.
Yeah.
And it keeps going back and it's just buy the house because it's your...
Yeah, as soon as it's ready, it works for you, buy the house. Yeah. And, it's not our job to talk someone into it, but if it works for what they have going on and their lifestyle and they're willing to think about it in a way that makes sense for them. Because some people may not be homeowners because they want to live in a house that they own. They might even decide to keep renting and buy a rental property. We're seeing a lot more of that too, where people keep renting, but then they buy an investment property with the whole idea that, maybe they're going to build a ADU, some of those new higher density laws that we have in place here in the Seattle area. It makes it, there's some new interesting ideas about housing and being a landlord that make people kind of want to maybe go that route.
Can you give us a house hack?
A house hack. Well, I think obviously if you were to buy a house and rent out the rooms to your buddies, that's helpful with your payments. That's the true definition of house hack. So meaning maybe you're going to live in the ADU and rent out the main house. So the financing looks pretty similar the way that goes. It's just, again, being flexible with your own standards. So can I live in that ADU for a year or two to be able to buy this house with low down payment? Or can I rent a house to somebody's, a room to somebody's? So I just think, again, being more open-minded and willing to be flexible that's when really things pay off.
Sure.
So
have you seen a lot of purchases where, have you seen a lot of duplex purchases where
everyone wants to buy a duplex?
I know.
Everyone wants to buy. There's not enough of them.
Oh
there's not enough of them.
You just have to go south. I feel like there's more options.
And then, the rents have softened a little bit.
Yeah.
So that's where that conversation that is a little bit more nationwide than here locally. But with the fact that rents are 50% less than a lot of mortgage payments plus maintenance costs. And so that's where the conversation goes. Do you stay a renter for longer? But that's not the case in our market because rents are still pretty competitive, but they have softened. And so there's so many investors that want to get into the market. And so duplexes and multifamily.
Those are odd ones.
Yes, I know. We own a few, and it's, I will say it's not all roses and butterflies or whatever we want to say, but
I know.
It's still, it's a great, investment. But then the fact that if you were to live in one of those units, it makes it so much easier to get into the transaction because you don't need as much down payment.
Okay.
So, yeah.
What about for investors? Just like one plug-in for investors that they own a home, but they want to invest. Is it a good time to invest?
I think as long as you are realistic with your time, so what that looks like as a landlord to be an investor, and if you don't have the time, you have a plan in place. So you have property managers and all of that. But I think what people sometimes forget about being in real estate investing is you're not buying for the cash flow. That's my my opinion.
Yes.
You're buying because of the forced savings that you get from real estate, meaning you put that money down, it's safe in that investment, and it's going to appreciate, and someone else is making your payment. Okay. But it might even mean you're upside down. Maybe you're supplementing that payment $300-$400 a month, but there's so many people that aren't saving that either. Right. So to me, I say, well, if you aren't saving that $300-$400 a month, you're just as good as offsetting a mortgage payment that you're not, or a rental shortage, because at least it's forced savings and someone's forcing you to do it. And so,
that's great.
Some of that is just we as Americans or we as humans, it's hard to necessarily change our behaviors and save. But if you're forced to do it, that's what real estate can, make you do.
Forced savings.
Forced savings, yeah. I mean, there's a lot of people that have to supplement their mortgage payment that is short from rents. But in the long run, if you have a great investment, or it's going to,
increase in value,
or you can do a major renovation further down the road, all those different things. And that's where, like what you were saying about certain pockets and location, right? Location is like, you can't, where a house is located. Yeah. I mean, it can't be changed. No. So it's so valuable.
I always say you can change everything inside the house. You can tear it down, you can rebuild it, whatever, of course, with money. Yeah. But location is everything.
Yeah, I know. And I love some of the AI tools. There's one called Remodel AI, and you can literally take any picture and
great tool.
Yes, and it's such a great idea just to get ideas. Like, I didn't think of that. That house could look amazing with that, and it's so quick. So I think just having those ideas at such a just easily accessible point is really kind of exciting. I love home design though, so it's kind of like, what wall can we take down? Or, what can we do here?
It's probably.
Oh yeah, I know. The eye rolls.
Right. Yeah. No. You mean me, right?
Yeah, I know. Well, you mentioned that meme, and I always think of the one where the wife walks in, with like power tools or something, and the husband's eating cereal or reading the paper, or and then they're walking in with their power tools. Like, what is she doing with that? Yeah. I'm still going to get my husband with that one.
That's
one of these days.
You should totally do that. That's hilarious.
And he's a reactor, so it would be a good one. So
please don't make a hole in that wall.
Yes. What are you doing with that? You do not have any business with it. Oh so gosh. I'm good with the ideas, not with the execution. Yeah. So do you have a list of like contract? Like you have a short list of people.
Oh yeah, I have a comprehensive list.
Yeah, not short list. Yeah, you've needed it all, right?
Absolutely. Yeah. I mean, contractors do get busy, so I have options for my clients, and who can get there first, who can give the best quote, and best job, of course, that's important.
Yeah.
So.
Yeah. The balance of budget and
Yes.
execution.
100%.
Yeah. I know. And then that's the whole question of, do we need more contractors? Because it's a trade that it's hard to find someone that is reliable and can show up on time and get the job done. And it's affordable. So
nowadays, nothing is really affordable. Going back to the question that we talked about.
Yeah,
so.
exactly. Everything costs more.
So if you were to give advice to a buyer who's like, I don't know whether I should buy or I should continue renting in this environment, in today's environment, what would that advice be?
I think it would be taking a hard look at your employment. So what's that look like? Is there any sort of chance that your employment may or may not change? The income level you're earning, could it go up, but also could it go down? Are you at risk of losing your job? And then also, are you in a spot where you can stay put in whatever you purchase for a couple of years? It's not as simple as I'm going to buy a house and sell it in a year, as you know.
I love that advice.
Yeah. And then, but also if you can't answer yes to that you're going to stay put, do you have an exit strategy? So maybe you do buy a house and you live in it for a year, but then it can become a rental. So that's your exit strategy where you've talked through that. Right. Okay, I'm able to rent this house for X amount after I live in it for a year, and then I can move on to the next goal. So just being really realistic of, kind of, your 2 to 5 year plan, which obviously some people.
I love this so much. Oh my gosh.
Yeah. But it's not fun to.
It's not.
No.
But realistic is better than just lying someone to.
Yeah.
Just to get you to buy
Well, and there's a lot of people that are purchasing, instead of waiting to get married, they're maybe purchasing with their significant other a little bit early. Yeah. You read about people that are buying with friends. I don't know that I necessarily love that idea as much. That idea I know it gets a little messy and there's a lot of blurred lines, but I think co-ownership is important to explore, but just making sure that you're smart about what could go wrong and making sure you have the legal.
I know that's kind of the scary part, right?
Yeah. Oh, and you think your family, like same with estates, you mentioned estates. You think your family would never fight about that, but you just see it time and time again that as soon as money is thrown on the table, some things can start to change and people's reactions and behaviors. And so as much as you can kind of plan ahead for that to not happen, it's helpful. So.
Wow, that was incredibly valuable. I find it super valuable just for my own advice. I mean, and advice I can give to someone else.
Yeah. Planning for the worst.
Emily told me.
Whatever Emily said. No. And again, it's easier said than done because at the end of the day, you don't want to cause, it's hard to have conversations about that. I mean, even just estate planning, it's not fun, but it's so helpful to your kids if you have that stuff kind of lined up ahead of time. Because then there's less question marks and then less emotions involved.
Yes, that's the hard part.
Yeah.
Well, this was super fun. This was super, lots of knowledge, lots of information. It was, fun too. I love it.
It is fun. I know. I used to say next time we're going to talk about bags.
Yes. And shoes.
Yeah.
Thank you so much again. This is Alina Araujo with Windermere Real Estate. I work in the greater Seattle area. I cover North Seattle, King and Snohomish County, including Woodinville, Bothell, and Kenmore. If you ever want to purchase a property, I'd be more than honored to assist you. Make sure to follow me on Instagram and subscribe to my channel for more valuable information like this. Take care.